What is going on, Alpha Hunters? It is a very uh, wonderful Wednesday. Is it Tuesday or Wednesday? Tuesday. It's a tubular Tuesday. Man, you don't even know what day it is? No, I really don't. It just, I should know. I mean, we had CPI this morning. Let's talk about it. CPI. All right. So CPI, the inflation data that we got this morning, core was a little bit higher year over year. Came in at 3.8%. Compared to forecast was calling for 3.7%. Prior month came in at 3.9%, so a little bit lower in prior month, but a little bit higher than forecast. Kind of get sandwiched in there. Inflation, the total number, last month was 3.1. Forecast was calling for 3.1. We got 3.2%. So a little bit of an interesting read there, and the market. I mean, didn't really care. I mean, that's about the best thing I could say. It kind of shrugged it off like, meh, not really a big deal. So, yeah, we kind of had a little bit of a gap up here on the SPY. And we did gap up about 0.4%. Basically traded negative there the first 20 minutes. And then that was it. I mean, we kind of ripped it there for about the next hour. Roughly to the daily highs. Kind of a little double top action here, kind of rolled over. Then for about 2 hours, hour and a half, 2 hours. And then about the past hour, been on a nice little bounce action, kind of climbing back up to the daily highs. Qs, nice little bounce as well on the open. Pulled back, they ripped it as well. Qs are a little bit ahead of the SPY by about 0.2% currently. So the Qs are up a little bit over 1%. SPY's up about 0.85%. Qs looking pretty good there. IWM, kind of a flat open. They got hit pretty good there in the first 10 minutes. Not gonna lie, they got hit pretty good. But did bounce, got back positive. Nice little double top here at this kind of resistance zone area. And it kind of rolled back over to the daily lows. Didn't break daily lows from the morning. It's bounced a little bit here over the past hour, 45 minutes or so. Trying to base and push higher. We'll see what happens. DIA, nice gap up here. Faded first, 10, 15, 20 minutes. Nice bounce, rolled over. Nice little pump here over the past hour. Very much. Most of the markets kind of seem about the same as far as the pattern and flow of the day, just some are a little bit more extreme on the pumps and some are a little bit more extreme on the drops. But yeah, RSP here even dropped on the open from that gap up, pumped. It rolled over to the daily low over the past 45 minutes to an hour. Nice little pump action. RSP gone sideways here the past couple days, 4 trading days, kind of been in about the same area. Nice little doji kind of coming in today. Okay. Still kind of resting. Not really a big deal right now. I mean, it got a little bit extended from the 10 EMA on the daily. Still might just be resting. It is, higher than yesterday. So, yeah, it might just continue to get pushed higher. That's all I guess got there. DIA finally coming back to life here. Previous couple of weeks, kind of just, it was just kind of consolidating, I guess. UNH was really kind of weighing this down the previous couple of weeks, so maybe UNH had a pretty good day yesterday. We kind of looked at that. Maybe UNH having a nice little follow-through day today, but DIA looking pretty good today, up 0.5%, not bad. IWM out of these five is the only one that's negative for the day. Kind of mentioned, man, this move on Friday. It's not shocking me that we're seeing a little bit further pullback. But I would say until we take out that low of last week, March 5th, you're probably not bearish on the IWM if you're kind of looking for it. I would say if you take that out and you close below that level, then you're probably like, okay, we could probably look for it. But I would say right here is not a bad spot to be buying the IWM for a potential trade and higher. Yeah, that's about what I got there. IWM, probably not a bad spot to be a buyer there. The Qs, which has gone almost nowhere here for the past 2 weeks, week and a half, 2 weeks. Really for the month of March. You can see kind of where it opened. A couple for the month of March. All right, I don't know what that flicker was about. March 1st. We haven't really gone anywhere. So kind of mentioned that back on March 1st. Watch out for these huge high pushes like this. Because typically, you'll have plenty of times over the next, couple of weeks to potentially get in at the same price level. And you see things kind of set up, chops around at that level. But kind of chopping here long enough to, if we continue to push higher here, probably just been a consolidation area. It's going to continue to push until we break this low that we did put in last week. Well, really 2 weeks ago. We kind of double tapped it yet last week. I'd say you're probably still sitting okay. The CPI number, even though it did come in a little bit high today, is not. The market's reaction today is an interesting one. Definitely didn't think that we would be up today. But the market's going to do what it wants. Nice. The SPY looks really good here. It just looks really good, really strong. How extended kind of are we on a weekly? Yeah, we're getting a little bit up there on a weekly. I know the 10 EMA here. There we go. 10 EMA taking a little bit to load there. We haven't really touched this 10 EMA on a weekly in a while. This has been a long time, going all the way back to November, and we know that the market's been on a absolute tear ever since November. And this has been, just looking back, like how many times we've had periods where we've gone that long without checking back to the 10 EMA on a weekly. It's been a while that we've had this level of bullishness kind of prolonged on the market. And you just this might be maybe one of the last ones that we had back in 2017, where we just kind of stayed extended above it, and we kind of just had to blow off the top, a few weeks. I do remember this is going into 2018, and then the market just dropped like a rock for about 20 to hold on. Was that really it? It was only a 12% drop. Okay, I guess it was only a 12% drop. I guess this is like the 20% drop. This is the 20%. Yeah, this is the 20% drop here that we got later in 2018. But that 12% drop, it happened quick. It happened over the course of 3 weeks, so it was rapid. And if you were on the right side of that, I was on the right side of some of that trading. But man, it was crazy. Some of those levels that got broke, and then they just, the air pockets, because all the moving averages were just super extended, were just huge air pockets. So it kind of seems like we're getting to something like that. I'm not going to say that we're going to pull back 12% here over the next 3 weeks, but that's about the last time that we were kind of this bullish, as extended as we are on a weekly. But until you see things change direction and take out, trends, support levels, stuff like that. There's nothing you can do. You just got to keep riding it, man. You just keep riding it. All right. But as for now, I'd say you probably keep, on the SPY and the Qs, you probably keep in that alert level right where it's at there on the SPY. Same thing there for the Qs. I wouldn't. SPY you can maybe move up to the low of yesterday, but I'm not going to do that. I'll leave it there. And we'll see what we got. Mostly because the 20 EMA is right there, and if we do get a quick snapback, maybe tomorrow or Wednesday, and we come take that weekly low right there, but we bounce off that 20 EMA and we kind of close maybe flat for the week. Yeah, I wouldn't want to get wicked out or have something like that happen. So I would leave it below last week, and we'll see how the rest of the week goes. Maybe we make some adjustments there. The VIX, yep. So kind of mentioned this yesterday. Probably expect the VIX to drop off after we get CPI data. It also helps the market is up, doing really well today, so the VIX has dropped off quite substantially. Be curious to see if we make this move back down to this uptrending line of lows that we've had here on the VIX. So we'll see if that happens by the end of the week. The DXY, the dollar index. Ooh, buddy. So we're having a little bit of a bounce continuation that we've had over the previous couple days. It's kind of what it looks like intraday. You can see where we got CPI data. Huge volatility there in the first 15 minutes and then just continued higher. But it's been fading ever since, which is kind of interesting. I guess it kind of makes sense because here's a look at the hourly. You can see how we came down the past couple times where we've had some bullish activity. It's been quick pops. You got one back over here. You got one right here. And then you've had a long period to settle out both times after those pops. You had one here. So be curious to see if we have a settle out period. And then maybe we look to have another pop later on here or the next day or two. But yeah, I mean, it makes sense that we, you're going to have a little bit of resistance as the moving averages are coming down. We had a pretty good drop, on the dollar last week. So probably going to be a good time period here on the dollar to just kind of either you're looking for the bearish play, not a bad spot, not going to lie. Or if you're not comfortable with the bearish play, then you're probably just sitting on your hands waiting for something else. Anyways, that's the DXY. DXY is up. Gold resting. Dollar's been up over the past couple of days, but gold has continued to perform pretty well. GLD here. Yeah, gold getting a rest here. Maybe we'll kind of come back to the moving averages here a little bit and continue to consolidate, bounce. Probably wouldn't look too bad there. So here's the yields. So this is where I thought the market would actually be bearish today. As far as like my call on, if CPI did come in a little bit hot, which it did. It came in a little bit hot. I thought we would be down on the market, but I thought yields would rally. Well, I got one of those two, right? That yields are up, yields are rallying, but we are definitely not seeing the market bearish, which I think is not a good thing in my opinion for some of the longer term, because I think there's just too much. I think there's just too much. I say gambling. I don't want to say gambling. I don't think gambling is the right word, but maybe it is the right word. I don't know. Kind of going on in the markets, but I mean, if we are bouncing here on yields, which the 30-year checked in with this trend that we did start back in December. We really started it, I guess, in February, because you need 2 points. But we confirmed it in March, right? We confirmed it last week when we bounced off that same kind of upward trend level here in the 30-year yields. So if yields start to rise again, this is where the bad part is going to come in, and I think the market is going to do it itself actually more damage than good by not resting, by not acknowledging, okay, we need to take into account certain factors. And now people are just, oh, you know what? Okay, we're done with that catalyst event. It doesn't matter about the data, and just be bullish. That's just it's a very naive mindset, and that's kind of what the mindset seems to be. That's about all I'll say about it. It's a very weird one. Here's the look at the 2-year yield. Yeah, 2-year yield bouncing pretty good. So all the yields are doing pretty good today, and 10-year yield, it's at the moving averages now. This is like if you're looking at this on a stock chart, this is where you say, okay, I'm going to take a bearish position. So maybe you take a bullish position on bonds right here. Like, this is a pretty good spot. Like, if you're going to do it, we got the breakdown over the previous couple weeks. I cannot fault you for saying, speaking of bonds, I cannot fault you for saying, hey, I'm going to take a bullish approach to bonds here as yields are checking in to those moving averages. Yeah, and here's a look at the LQD. It's getting close to those moving averages. Not a bad spot to say, hey, I'm going to buy and be bullish on bonds and bearish on yields at these moving averages levels. Makes perfect sense. I understand the logic. See, TLT, same kind of deal. At the moving averages, after we had breakouts here over the previous couple weeks, I get it. I totally understand it. Just understand your risk, have your stop losses set, and these are pretty easy to set up because you're at the moving averages, so you can play it kind of loose. You can have a stop loss down here, but if you get through the moving averages, you could actually kind of have a trigger and say, okay, we got through the stop loss. I don't want to take the full loss. I'm gonna bail out maybe at like this level here around 94, but your stop loss is down here around 93, right? You can play it a little bit more defense because this is such a good level to try to be bullish. At least looking here at the TLT. I get it. Makes perfect sense. But as far as, so I was kind of looking at the bonds real quick. As far as the 10-2 inversion, it's not really doing too much. All the bonds are kind of moving kind of the same pace, kind of flat there as far as the inversion yield. So, yeah, looking pretty good there. Let's take a look at sector rotation. All right, take a look at that sector rotation. It's all into tech today. Tech is doing very well. Has not been doing well over the past 2 weeks, but there's been, there's pockets of tech that's been doing well, continue to do well, like Nvidia. Nvidia's its own pocket, right? Its own black hole. Discretionary is kind of in line with the markets there. Staples underperforming. Everything else is underperforming. Communications, healthcare, financials, industrials, materials, energies, real estate, and utilities, which has actually been doing okay over the previous couple days. Not doing all that great today. Intraday buying or intraday trading, I guess. Discretionary has actually been one of the better ones. So they had a decent gap down there on discretionaries, or they didn't gap up as much, is my take here. Tech, a little bit outperformance there intraday. And you got everything else definitely has been underperforming really since about this time period. About an hour into the trading day, a lot of sectors started dropping off, not continuing the bullishness. Healthcare, staples, industrials, financials, communications, materials, energies, real estate, and utilities. Okay, so I think I mentioned yesterday I wanted to look at crude oil, and I didn't. I meant to. Let's take a look. So obviously we can see intraday, it's kind of been rolling over. All right. So we had a nice little lower wick yesterday. Obviously, this is a lower wick from breaking down the previous couple day lows. Typically, that's a pretty good bullish sign. But if you break that low, if you break this lower wick here, especially anytime soon, like if we were to bounce, roll up, and then kind of roll over, yeah, okay. I mean, it's its own different thing, but if you follow that lower wick by just breaking it down here relatively soon, yeah, I mean, we're gonna start to really trade lower, and it makes sense. Crude has not been performing well, even though there's a lot of people saying, "Oh, yeah, you should be bullish on crude." I mean, you just look at the past several months. We had a very strong downtrend for October into the middle part of December, and then since then it's been in an uptrend, but it has not been in response to that kind of bearishness that we did have at the end of 2023. The beginning of 2024 has not been that great, and it kind of looks like we're having a little bit of a rollover here over the past couple weeks. So here's a look at gasoline. Gasoline's holding good though. Gasoline and heating oil are the ones that they're really going to dictate if crude oil is going to do anything. If heating oil and gasoline are not bullish, crude oil won't be bullish. But gasoline's starting to look better. Heating oil still looks like it's struggling, busting. So it makes sense, I guess, because they got pretty dislocated, not dislocated. Yeah, I guess the markets kind of got outside the norm.